Hi guys, welcome to Tuesday's Live. Wow, a lot has happened. Oops, sorry about that. Thank you. But a lot has happened since we were together last weekend, and I thought that it was, or last week, and I thought that it was important to go over that. And, you know, normally I just do like a little thing to begin with, and then I move on from there with Q&A, but I'm going to try something new. So let us know if you like this, if you don't like this, if you want more of it, or you want less of it. So just bear with us on this. And it was important for me. Hello. Juliet is joining us today, but it was important for me. You'll see what I did, but I'm going to start here. Record debt in richest countries raises alarms because global budgets are strained by borrowing costs. So let's just bring those borrowing costs down so we can borrow more and more and more. Well, there's a real problem with that, and I think we're starting to see that. And you have to ask yourself, you know, has the crisis begun? So let's go to the slides, and we'll start here, because what I'm seeing are a lot of stress signals. And this is extraordinary, and it's a warning sign. Because this past weekend, I looked at it, and it was really interesting. I was looking for what people were searching the most. And millions of people went searching, not for entertainment and not even for distraction, but for answers. They were looking for about what was going on with the gold and silver volatility, with crypto crashing, with bank safety, with inflation that won't go away, with the Fed losing control. And quite honestly, the reason why I read this first is because this is where it stems from. Why? Because the system is based on constantly compounding debt. And if you have a problem growing debt, you have a problem growing the fiat currency to stimulate the system. So that's why I brought that up first. But let me show you those signals, because it's showing us that that confidence is cracking, and the public, well, we can feel it. Because before a system breaks, we get a warning. Before the markets move, fear moves first. And right now, the world is asking the same question. Is my money safe? But you're talking about your fiat money that's in the system, and I can tell you right now, no, it's not safe. But what they don't realize is that these searches, they're not about the markets at all, really. They're about that first domino to fall, the one that falls really quietly. You can't even see it before the rest fall quite loudly, like we've been seeing over the last couple days. This is when the illusion starts to fade. The moment when systems reveal their weakness. And this is the moment when preparation becomes power. And that's what we have to do. That's what this is all about. My personal goal is to translate this financial noise into understandable language so that you can make educated choices that puts your best interest first. So let's move on so I can show you the first domino to fall was Microsoft. On January 30th, if you haven't noticed this yet, one of the most stable mega caps gapped down 11%. That's actually not normal. That's a collateral event. And you'll see where I did that circle on this slide. That's because the 50-day moving average, which we've been talking about this quite a bit, the 50-day moving average crossed below that 200-day moving average. And that is a technical bear signal. Okay? So look at that gap down, because that then triggered the next piece, which is Bitcoin, which has already been in a bear market. Crypto is always a speculative release valve. So when liquidity tightens, it goes and drains there first. And when confidence evaporates, well, frankly, utility matters. And in a crisis, the world turns to certainty, not speculation. And why does that matter? Because what we're looking at are contracts, and contracts are used in one place. Bitcoin or cryptos or other speculative intangible assets, again, one place, 33 places, 36 places. So when demand goes away, guess what? They can and they do go to zero. It's confidence that gives it value. Just like fiat currency, just like this stuff. It's your confidence that this is something real, that this is something that has value, that pushes you to use it and be willing to work for it and try and save it. But quite honestly, that brings us to the canary in the coal mine. Because, all right, sorry about that. I'm a little ahead of myself here. But I want you to look at the spot Bitcoin, because we've been talking about the 200-day moving average. You can see the same kind of crossover that you see right there. So what you need to know is that 50-day moving average currently, the spot price, is 13.73% away from that 200-day moving, or from that 50-day moving average. And I did these on Friday, so they're probably a little bit different today, but it proves the point and makes the point of what we're talking about here. That 200-day moving average, 26% away from that 200-day moving average. Remember, 10% is a lot. Can we have a dead cat bounce? Yes, we can. That's all that it will be about. It doesn't mean that anything has actually changed in there. But what about, oh yeah, look at this. I pulled this morning. That's why I'm a little off on remembering what's even in here. But crypto exchanges buckle as stock losses top 55% on the retail exodus. Retail exodus, one place. You see what I'm saying? When demand goes away, if you've got everything in one place, you've got nothing. Further than that, this I'm going to have to read hard because it came up this morning. Get me out. Traders are exiting a lot of their positions in artificial intelligence, right? So can you see how one thing, it's a domino effect, and when one thing goes down, it implicates other things as well. But here, gold and silver are the canary in the coal mine, and the canary is screaming because it's about the paper market cracking. I love this slide, and I had to use this slide because what does it say? This doesn't seem like a store of value. How are we supposed to trade this? Gold and silver are not a trade. The paper market's whipsawing 200 points one way or the other. That is about a trade and paper, and it's a trading market. The physical market is way different. It doesn't move that fast. It can't move that fast. And volatility in metals isn't really about the metals. It's about that paper market cracking. And when the derivative structure wobbles, and remember, derivative is just a big unsubstantiated bet. You can't convert it into the underlying. But when the derivative structure wobbles, it's this physical market that reveals the truth. Volatility is not risk. Counterparty exposure is that risk. And the physical market, well, it's told in a very different way, and it's showing a different story that started in 2025, right? When we were transitioning away from the paper markets into the physical markets dictating everything. Gold's record run in 2025 was not speculative. It was structural. We've talked about it throughout the year. Jewelry volumes fell 18% because prices rose, but spending hit $172 billion. consumers did not walk away. They shifted how they buy gold. China is a great case in point, and so is India, because people moved from jewelry to bars, coins, and even ETFs, which is not gold. That's what Wall Street wants you in because they can still control it. But the physical metal in your possession in any way, that's gold really returning to its monetary roots. We also saw a massive, I'm a little ahead of myself today. But we also saw a massive east to west divergence. Western investors, like here in the US, they bought ETFs, while Asian buyers, especially in China, they bought the physical metal. Well, that's because the US has been used to those contracts dictating price. But what we're seeing is that breaking down. China's bar and coin demand broke the 2013 record for the first time ever. You saw bar and coin demand surpass jewelry consumption. So the question was, did I miss the trade, right? Because it went up so fast? That's not really the question. What role does gold play in my portfolio? And it's as a stabilizing force, because that shift didn't start with consumers. It started with central banks, the quiet accumulators. And you can see, I want to point something out to you, and I will be updating this chart. I just got all the data from it for 2025. So this actually goes through 2024. But from 1990 to 2000, central banks sold and leased and did all sorts of funny things to suppress the visible price. But by 2005, that course was reversed. And by 2010, they were net buyers. I'll point out that 2005 was 3 years before it became obvious to you that there was a problem. But central bankers knew it back then. And today, they're buying more gold than at any time in modern history. So let me show you what that looks like. Because what you're looking at here are a bunch of central banks, and those blue lines, 22 institutions reported an increase in their gold reserves around a ton or more during 2025. And you already saw how much they've been accumulating. And yet, like I said earlier, demand actually set a fourth quarter record, but a lot of that demand actually came from the public. So the public is noticing that there is a problem here. ETFs inflows, well, I think that this is interesting because this is one way that Wall Street can control the visible price, because an ETF, all you have is a share of a trust. And the underlying gold and or silver that supports that, you have no access to. But Wall Street can decide to buy the ETF and push the spot price up, or sell the ETFs and push the spot price down. It's a tool. However, what I liked the best was a 12-year high in bar and coin buying, because that's the public. So the central banks kicked this off. They've been buying since 2005, but the public is now transitioning. And I like that so much, because really, silver is the warning. Silver, and here it was. This was the beginning of January. Silver is now a strong buy, the highest lease rates since 2008. So what we're seeing here is the cost to borrow silver or to lease silver in times of stress spikes. And the timing of these spikes tell this story, because short-term silver lease rates hit their highest level since 2008, and both of these levels, which were in October of 2025 and then just recently, both of them are significantly higher than the lease rate premiums in 2008. What is that telling you? They want you to think everything is hunky-dory, that everything is just fine. But silver is the fuse. And what silver is telling you, even in these paper contracts, is that confidence is declining. And this is tremendous for you to know, because when confidence falls, well, what do? Exchanges intervene. And let's see, here it is. Market intervention. Surging silver and gold slide after the CME, and I did a video on this, raises margin requirements, which means that you have to come up with more collateral to borrow, which both of these, between the lease rates and the margin rates, that makes it more expensive to speculate. When you have the physical metal in your possession, you're not speculating. You're holding something with no counterparty risk. But all of this other stuff runs tons and tons of counterparty risk. So it was in, and this is really important, December 20, let's see, I think that's 29th of 2025 was when they did their first margin hike, triggering an immediate sell-off. Silver fell about 8% and gold about 5% on that Monday after they raised the rates. But that wasn't enough. Why not? Because guess what? They did it again on December 30th to the 31st. They raised the margin rates again, and again in January, just recently, on the 31st again. 3 hikes in 1 year. The first one alone was massive. 33% for gold and 36% increase for silver. That's massive. And the CME rarely raises margins twice in 1 week, unless that volatility is extreme and they are extraordinarily vulnerable. This, the 29th, the 30th, and 31st, this was a double hike event. What does that tell you? Because that tells me panic. That's what that's telling me, and that's what it should be telling you, because we've been talking about it all year. This shift is not completed yet, but I think we're at a very interesting part of this shift, and the shift I'm referring to is the physical metals dictating the markets, because we've certainly seen the premiums and talked about the premiums to buy the metal in other parts of the world, right? And the market reacted exactly as you would expect. What happened? Oh, I want to show you this too. This is from the FDIC's most current, so third quarter of 2025, gold and silver derivatives in the FDIC insured banks. And I circled 2025 so you could see how much more banks were trading gold and silver. Contracts, not the physical, the contracts. So that is an easy way for them to actually control the price that you see. And here's the market reaction. And actually, I noticed that one of the questions was about support and resistance. But on Friday, you saw silver make a major dumperooski. Right? Now, let's go over the terms that we've been talking about for quite some time, because Friday's drop didn't change that trend. And actually, any of the drops, well, today, everything is spiking up. But yesterday, there was even another drop in spot gold contract. But even that did not take it out of that overbought position. Remember, we've talked about this right along. Remember, that does not mean overvalued. But overvalued means that the fundamentals don't justify the price, but that's not really what's happening right now. The fundamentals are very solid in both gold and silver. So let's take a look at it, because on that particular day, spot silver And there's your 50-day moving average that we talk about, and there's the 200-day moving average that we talk about. So where are they? Well, at the end of Friday, you still had the 50-day moving average at almost 15% and the 200-day moving average at 75%. Keeping in mind that 10% is a lot. I don't really care if it pulls back. It is a contract, and it does not reflect the true fundamental value of an ounce of silver, which is somewhere around $1,800 to $2,000. It's a bargain at these levels. Well, let's take a look at spot gold. Here you go. Spot gold is the anchor. Here's your spot gold, your 50-day moving average, and your 200-day moving average. Where are we at? We're still almost 10% away above the 50-day moving average. Now, I think it crossed it yesterday, but it went back above it today. And now at the 200-day moving average is still over 29% away from that 200-day moving average. So knowing the truth can help you make educated choices. You're looking at paper markets here. But keep in mind that we are transitioning into the physical markets dictating the price. And I am very happy about that because it's about darn time. And I hope you understand what we're seeing. And I hope you liked it this way and how it was a little goofy because I decided to do the transitions in there so that you'd be more clear on what I was talking about next. So let me know if you like this. It was a long form. I don't usually do a lot of this, but what's happening in the markets is so important, and it just flows to what we've been talking about with the moving averages. And again, you've got to do whatever you're comfortable with regardless of what anybody says. But I did see some gold and silver people online, and I didn't bring the titles up, but they're like, sell silver, sell silver. No. Keep accumulating. Take advantage of the opportunities while you can, because we will get to a point where we just might not have those opportunities. And you'll be very happy that you're in full position by then. I could tell you for a fact, I'm very glad I have my Bugout location. So, here's a question from one of Sari's clients. Lynette, what are the resistance and support levels for both spot gold and spot silver? So let's go back to those charts because I didn't really quite do this, but I can tell you just from a glance on the chart. Can you pull that back up? I've got the gold on there. Okay, thank you. You see where that cup formation is, and then it kind of goes back down? It would be that cup at the tippy point, so that would be close, pretty darn close to the 50-day moving average, is where you've got a level of support. So somewhere around 4,500 would be a nice little level of support. And with let's go back to the silver, and we'll take a look at that chart. And resistance, it would be where it peaked. So it was well over 4,500 where it peaked. And here's the silver chart, okay? And let's see, silver's is much closer to that 200-day moving average. So if you take a ruler, which obviously I didn't do it on this because I wanted to just talk about the moving averages, but you see that little cup formation and then that breakout, that's where your support level's gonna be. I see some movement around, it would be nice if we could kind of get to a point where if I do it like on there live and draw the lines so they can see what I'm talking about. I don't know. I don't think we can figure that out today, but do you think we might be able to do something like that in the future?
For sure, definitely.
Okay, good. So we'll work on making that happen. But if you take a ruler and you take the chart and you just kind of see where it kind of hits that level and pulls back, it's actually pretty easy to see where the support and resistance levels are. So remember, resistance is on the top, support is on the bottom, right? So when you break a resistance level on the top, that then becomes the next support level. And if you break a support level on the bottom, that then becomes the next resistance level. Spot silver has a very long way to go before it really tests anything. And before I came in here today, when I was looking at what was happening in the markets, I saw spot gold up like about $260 or something like that, and spot silver was up something like $18, I think, or something like that. Don't hold me to it because obviously I'm not looking at it, but we're getting a bounce in here. But what I really want you to understand is you're looking at a contract. It's a contract, and those contracts are used in one place. What I encourage everybody to do is hold the physical metal itself, because 33 places, 36 places. This is what you need. This is your bazooka in a reset economy, which is what we're in. And possibly when we're going to see real estate crash, well, it's already started, and it's already started on a global basis. Possibly when silver, gold will be back again. I'm not sure what you're asking there. Do you think the end of the dollar will happen by the end of the decade? This is Steve Sierra Rico. I'm sorry if I butchered your name, from Facebook. That was a question from Facebook. By the end of the decade, yes. Now, mind you, they could keep the name. That's what they always do. Because that way, if they keep it, even if they call it a digital dollar or whatever, you won't know that anything has changed. Remember how they do this, which is ever so genius, really. Okay? They get you used to something. Okay? And then, like in, the gold was the original money. Then they came out with the gold standard, or the gold certificates with this little gold on here, and also the Federal Reserve note. And actually, I have a better one that's closer to this date, but at any rate, you get the point. So everybody got to use this with the same stated face value. All of these have a $20 stated face value. So when they took these away, we still had this. So people thought, well, I've been using this for 20 years and it hasn't been a problem. So nothing has changed. When in reality, we, the public, allowed the central bankers and the government to remove our power. I say we got to take our power back. So, yeah, I do think the end of the dollar will, we're now in 20, that's 4 years. Yeah, I think it'll be done. They may keep the name, but I can't say that I think even in the 4 years that the worst will be over. And I say that because we still have to go through that hyperinflationary depression. And I'm certain that this is a global issue. Globally. So that's pretty big. And I can tell you that personally, I structured my portfolio with 10 years worth of barterability, because these things don't happen really quickly. You can look at, they do the overnight revaluations, that happens overnight, but they have to burn off all of this debt, because we're now told that what's going to justify the creation of new money, thank you stable coins, is debt and purchases. So they still have to manipulate us in a place where they can burn off all of this debt that they're growing to create all of this money. And we can do the same thing with any of our fixed rate debt. And they get into position to take advantage of that overnight revaluation. And then people ask me all the time, and you see more and more articles about the gold revaluation account. And wow, if they did it with spot of $4,500, that would generate this. That's nothing. It's chump change, and it's not real. They'll never do it at that. That would be idiotic, right? They're going to move it more toward fundamental value, so they repay this debt with, in this country, dollars that have zero value. But for you and me, we can take a page out of their playbook, and in the strategy that we execute at Zang Enterprises, we look at what your fixed rate debt is, and then we make sure that you have enough gold so that when they do that overnight revaluation, boom, you pay it off with, in this country, but wherever you are in the world, with fiat currency that has zero value. Oh, hello. Ugh, I love this girl. Love her. She's such a good one, and she takes good care of me. She protects me. So, Scott H. 9828, can you explain how we get to physical market pricing? Oh, well, this is what's happening. What we're seeing, and can you go lay down, please? What we're seeing is the digital market starting to fall apart. So you've got a big part of the world that's more used to physical that are commanding huge premiums, which we'll see again here too. We did in 2008. That was crazy what was happening in the markets. And what we saw in 2008 was the spot market tanked, the mining stocks tanked, but the physical only market, this market, made this trend high because this is physical only. So we're already seeing it, but it's the growth of premiums and the disillusionment of paper. And can I explain how we get to physical market repricing? With all of this whipsawing and more demand for the physical markets everywhere else in the world is how we do it. And I'm walking through this with you. And I'm accumulating every key thing so that by the time we get there, I'll be able to show you a very clear pattern of how we are getting there. But this massive volatility, when I first came in, I mean, we had spot gold at $248 an ounce. And if I got a 5-cent move in a day, it was a big move. To see spot move then to hundreds, but now multiples of that is an indication of the breakdown in the paper markets. So it's this level of volatility that is not sustainable that will ultimately be the demise as the fiscal and financial power shift from the West, from us, from the U.S., to the East, to the Asian countries, to India, to more countries that are much more attuned to the physical gold markets. And that's happening right now. So Sari's client Rochelle asks, why would some people want to move from holding physical precious metals to investing in mining stocks or mining sectors? Can't paper contracts be seized? Yes, paper contracts can be seized, and also I would say mining stocks and mining sectors are corporations. They're not about owning the physical metal itself. Having said that, some people might consider mining stocks or the mining sector to be a more leveraged way to play this. That is not me. That's not where my level of comfort is, because I'm well aware of what governments can do as far as confiscation, even without saying confiscation. You know, there's royalties. That is a form of confiscation. There's taxation. That is a form of confiscation. There is government's ability to declare a certain amount of what they pull out of the ground to be sold in the local currency to the government, etc. So some people would do that because they don't really understand the risk that they're running. And they think that if they own a mining stock, that they own gold. Just like people think if they own an ETF, they own gold. They don't. They own a contract. And any contract is only as good as the entity on the other side of that contract. And that government entity to miners, oh, they have a lot more power than the markets have. But it's all counterparty risk. Gold, physical gold in your possession, according to the Bank for International Settlements, is the only financial asset that runs zero counterparty risk. So, yep. And it's not that the paper contracts can be seized. Of course they can. They can halt trading, right? Have you not seen that? They can eliminate your ability to pull your money out of the system. That's why they like you in it. It's much easier to say nope and to control you. It's much harder. If the world were back on a sound money gold standard, redeemable gold in the system, that's much harder to control, because if you, the individual, don't like what you're seeing, you go and pull the gold out of the system, which creates restrictions around what the governments and central bankers can do. Now they have no restrictions. And what power do you have over our elected officials or our unelected officials? Zero. Zero. That's why I'm fighting so hard to get redeemable gold back in the monetary system again, because we have to take our power back, or what they have in mind for us is not a good thing. It's full surveillance. So that's basically it. And they can seize bullion as well. I mean, they've done it before. And let's go to the next question. And just a quick question. So this is Stu Neal from Facebook. Just a quick question. While I become a subscriber, thank you so much, a year and a half ago, we had a tornado in Elkhorn, Nebraska. Tore the house up. We moved out. My wife had liver failure, I'm sorry, and passed away. And I used all of our for wants to medically help billings and emergencies with her, so that money is gone. I put money in some stock, and I bought a pound of gold and 800 ounces of silver. I have $29,000 left on a mortgage at a 3% fix. Should I pay the house off? No, execute the strategy, because right now you can take that $29,000 and actually buy more gold and silver. If you already have gold and silver, then you already have the means to pay that mortgage off in an overnight revaluation, as long as you have the kind of gold and silver that does not get confiscated. Now, I just said that, but I want to tell you, I can't guarantee it one way or another. We have confiscated gold in the U.S. 5 times, the last time 1971. So that, to me, that is very clear historic precedence for that happening again. And desperate governments do desperate things, and we're just talking about the gold revaluation account. So it isn't like they want you to hold on to your purchasing power and your wealth. And because gold has been confiscated 5 times, that's why I only do the pre-33s. You got to do whatever you're comfortable with, but this is my level of comfort because I was alive when gold had been confiscated the last time. And I didn't realize at that time, because I was young, the value of your ability, not just to hold gold, but to use it in the normal marketplace. Because what I'm actually doing is executing a strategy. What are you doing? To me, this is not a trade. To me, this is a foundation of wealth that I can sustain my standard of living right now, make sure I don't personally have a lot of fiat money wealth other than cash because I'm running a business, but I don't personally own stocks or bonds or any of that crap. But if you do, then it would protect that, and then position to take advantage of the opportunities that will arise as the real estate market goes back to its fundamental value and probably beyond that. And we see who's going to survive, whether they're cryptocurrencies that are going to survive this, or there are stocks that might survive this. But at this moment, I could guess, but I couldn't tell you who's going to survive it because so much stuff is done off balance sheet that we can't see. But a big enough crisis is going to show who will survive. And then if you hold your purchasing power intact in a form that you can use it in the normal marketplace, then you start to convert into those income producing assets or even other assets that are well below their fundamental value. Right now, it's based on this stuff, and it's not the markets going up. It's the value of this stuff going down, hence my $10 trillion Zimbabwe note that I can't buy anything with. So Let's see the next part of that question. And Linking Atlas asks, Lynette, kind of shocked after hearing from you and others that there are several individuals in the U.S. having millions in cash in banks. If they make it gold illegal, how can you spend it? Okay, let me reread that to make sure that I understand this Linking Atlas, because I'm not sure that I do understand what you're asking me. So, okay. So after hearing from you and others that there are several individuals in the U.S. having millions in cash in banks, well, the cash in banks are probably from businesses like a Warren Buffett and his business having millions in cash in banks, but most people probably don't have millions in the bank. I have to have enough money in there since I'm running a business, but if that all goes away, I don't really care because quite honestly, I have it properly diversified with this is my savings gold. So if I absolutely had a problem, paying my employees or my bills, then this would be what I would liquidate first. Not this. This is for a different function. But this is what I personally use for savings. I don't have millions and millions in the banking sector. Why would I? That's just a sucker's bet. So I don't really understand what you would do. Because if they make gold illegal, how can you spend it? You can't. That's why I don't buy bullion. Now, I've had a lot of people say, well, that's not entirely true. There will be a black market. There will be. But you're not going to get full value, and you're not going to be able to execute the full strategy in the normal market economy. And considering the fact that they want to take us all digital so everything flows through their system for them to see, control, and manage, let's call it manipulate, it just doesn't frankly make sense for me to buy bullion. This is my one piece of bullion and my bracelet that you see, and that's kind of in jewelry form. But that's why I just do the pre-33 route, because what if I'm right and what if I'm wrong? With this, because I'm so clear on what the fundamental value is, I can't, this automatically eats up any fees, any premiums, any losses, anything. So, but this is the kind of gold that I can use in the normal marketplace, and there's a global market for it. So it's easy for me to do. So that's how you can spend it. You have the right kind of gold and the right kind of silver, frankly, but the right kind of gold for whatever it is that you're trying to accomplish. That's why our Zang's enterprise sound money strategy starts with your goals. That's what it has to be. And Gina Young, 6900, asks, wow, what do you think about Kevin Warsh as the new Fed chair? Do you think he will be good for gold and silver? Thank you, Lynette. Well, it's going to be very interesting to see because I anticipate this year that there will be several times that they will lower the interest rate. And remember this article that I just kind of read you the headline on? Record debt in richest countries raises alarms, and that global budgets are strained by those borrowing costs, right? So they're also strained by all the level of borrowing that they've done. But let's not talk about that, because if you're at zero interest rate, you can service more debt, except they're not servicing it. They're compounding the interest. They'll pay whatever interest. And I've shown you that chart where we've got the interest payments on the debt here in the U.S. at a hockey stick, an exponential level, just going straight up. So yeah, it's a big problem, and that's what's kicking off this collateral doom loop. And I'm really excited actually about this series that I've been working on. And it's going to be a minute because it's going to be like really, really good. It's a 5-part series on the doom loops of a financial crisis. And the first doom loop, which we could very well be in right now, that could be what the spot silver and gold markets are telling us, is the collateral doom loop. Because this collateral is based on a lick and a promise. It's not based on anything foundational or real. So they've managed in the different crises to kind of paper that over, but that's the problem with this level of debt. It's not that the debt isn't sustainable. It hasn't been sustainable in ever. It's no longer growable. That's what the spike in interest rates on the 30 and 40-year bonds in Japan, in Germany, right? Germany's interest rates are as high as they were going back to 2014 as they were going through the sovereign debt crisis. Spiking here, spiking there, spiking everywhere. Why? Because they're demanding more. The markets are losing confidence in the government's ability to grow and service more debt. It's a big problem. What supports, and for any of you that is working with some kind of stockbroker or some kind of financial expert, this is the question to ask them. And if they don't, I'm going to give you the question, I'm going to give you the answer. And if they don't know what that is, you should run, not walk. Don't listen to them. What supports supports the creation and the valuation of new money in this system? That's the question. How's money created and supported? Here's the answer. The full faith and credit of the government. Translate that. As long as you have confidence, you have faith, then you will loan them money, extend them credit. But I don't care whether you are a government, a corporation, or an individual. There are limitations on how much debt you can take on and service and who will continue to give you more credit. But does that really help? It helps in the beginning to take on more debt, but that only works as long as your income can keep pace with the level of debt that you have to service. So this is what this is telling me, and what the markets are showing me right now is that the world is losing confidence in these advanced economies, in their ability to create more debt, because who's buying it? I've shown you before the run on the dollar that started in 2008. And that's with Japan and China primarily buying fewer and fewer of our treasuries. Why do you think the Federal Reserve is sitting on any treasuries at all? That's what a third world country used to do. And that's what we had to start doing in 2000, when we no longer attracted enough buyers of U.S. debt. That the Federal Reserve really quietly, you never heard about this because that's a bad thing. That was a bad thing. That's what third world countries had to do. But here, the U.S. started doing it in 2000, and by 2009, it was a good thing. It's a good thing the Federal Reserve in 2008 will go in and just buy up all of this debt. But every time they've made an attempt to run off that balance sheet, they've had to do it again. They've had to pivot. And instead of allowing their balance sheet and treasuries to decline, you get a spike, and they just recently did a pivot again. So Kevin Warsh, time is going to tell. Do I think he'll be good for gold and silver? The answer is yes. I do think that he will be good for gold and silver, but maybe not for a positive reason, but for a negative reason. Because when they lower interest rates, they're saying we need more inflation. What that really means is that the value of the dollar is too high and they're going to take it down. So that is good for gold and silver. But we'll see. We'll see. And we have another client question of Sari's. Boy, Sari's been busy today. Do you think that the mortgage interest rates will go down? And if so, what indicators should I be looking for? Well, remember that mortgage rates are typically, it's going to be interesting, tied to the 10-year note, the treasury. And so when markets panic, if they perceive value, this is where we are right now, and it's in a really weird place, because what the central banks can actually directly control is the overnight interest rates. Now, mortgages are tied to the 10-year note. So that is not, the way they control those interest rates is by buying the 10-year note, and also mortgage-backed securities pumping a lot more money into the system that can then be lent out on mortgages. But they need interest rates to go down on mortgages so they can stimulate buying, people going out and taking on more mortgage debt. We're between a rock and a hard place, really. And yeah, I do think that mortgage rates are going to go down because they're going to try and stimulate the mortgage industry, which is in the U.S. about 30% of all the money, the GDP, all the money that flows through our system. On a global basis, that's even higher. But quite honestly, that crack has already happened, right? In 2022, when they started raising rates, we're starting to see the impact of that today. And remember, governments and central banks always want distance between their policy moves and when the public gets it, so that you don't relate what's happening today to the choices that they made before. That's what the control of interest rates is about, and that's what perception management is about. What I'm trying to show you is the truth. Because how many times can you be lied to when you do not know the truth? Every single time. It won't be a good thing. It's just a way to kick the can. And what I'm seeing in these markets, (2026) should be a very interesting year. And holy moly, 271 asks, are there new government silver reporting requirements starting mid-February? I have not seen. I will look at that. Would you make sure Jessica puts on a slide?
Yeah.
I have done like a lot of digging in this. I have not seen anything like that. Person turquoise waving. I'm not really sure.
Oh, that's...
Oh,
just disregard.
that was you? Okay, I wasn't really sure what that meant.
The little emojis that they put in the chat, and it just didn't translate.
Oh, okay.
But this question is like popping off in the chat. Excuse me.
Because of the strategic minerals.
Apparently, like if you purchase over what they're saying in the chat, if you purchase over like $3,000, they have to report it to the federal government that you're buying X amount over the limit of silver, and so the federal government would be able to track who's buying so much silver. So.
Well, silver has been considered a strategic asset, and Monday, President Trump came out with, I can't remember what it's called, but it's about stockpiling strategic metals to help offset some stuff. So it could be in there that they required the reportability. And I'll go in and I'll take a look at that, because I did go in to look at some other reporting questions that I had from last week, and it was just a rumor that was going around. There was nothing official. And I answered all those questions too in another video that'll be coming out. So I'll look and I'll come back with that next week, just make sure that I get it. And at NR 6868, how do the bond markets create money, and how is this breaking down? Those are great questions. Okay, well, the bond market, so money in this system is borrowed into existence. So that's how the bond markets create money, because bonds are a debt instrument, and they can come from you. You go into the bank and you borrow for a mortgage. You have now just borrowed a whole bunch of new money into the system. They can come from governments, right? So when governments issue bonds, right, it's really the Federal Reserve that creates those bonds, And that's how money is created. Oops, I wish that would happen to them. But that's how money is created in this system and how debt creates that money. You borrow it into existence. That's the fractional reserve system. Beside that, and we are going to work on this chart so that it's really better. If you have not seen the series on BAR that I did, that came out maybe 4 months ago, 3-4 months ago, look at the very, very first one, because that one actually shows you the beginning of how debt became money, and more specifically, how corporate debt became money. But if you question it, NR 6868, pull a bill out of your wallet. And what this bill will say on the top is Federal Reserve Note. Well, the Federal Reserve is a private corporation, and a note is a debt instrument, the 10 years. So a bill, a note, and a bond, those are all debt instruments, and the difference between them is the maturity. So a bill is short term, a note is intermediate term, and a bond is long term. But that's how they do it. The government says, I'm going to issue and sell these bonds. So the Federal Reserve creates those bonds and sells it to the public, and they sells it to the government, and then the government has those auctions and sells those bonds, and that creates new money. That's how governments do it. Individuals, you can borrow for a car, you can borrow your student loans, you can borrow for your credit cards, you can borrow for anything. And when you borrow, that generates new money in the system. That's why this whole system is based on constantly compounding debt, never to pay that debt off, because if that debt gets paid off, that pulls the money out of the system. So that's why what we see is new issuance and rolling that debt over. That also goes to compounding interest. When I did a study in 2009, I said to myself, at that point, that was the first time that we hit $1 trillion deficit, meaning that we spent $1 trillion more than what we had coming in through taxation and fees and all that stuff. And I said to myself at that time, 2009, I said, but wait a minute. The deficit spending has not been horrible. You can pull that up on the Fred, surplus and deficit. You can see it. Not been that horrible. So are you pulling that up for us? Okay, so yeah, that's at the Fred, deficit and surplus. And you'll see, if there you go. Thank you so much. That's it. And can they see this now? Okay, hold on a second, and I'm gonna wait till he gets it on the screen so that I can walk you through that. Okay, so this is the Federal Reserve Education Department, my favorite website, because it's probably more honest there than anywhere, even though it's meh. But those gray bars are official recessions. So if you take a look, then you see in 2008, which is that medium gray bar, yep, there, you can see that was the first time that we hit $1 trillion deficit. And I said to myself, well, I mean, it doesn't look that bad before that, right? So why are we servicing 13 trillion in debt if we just hit that deficit? So in this Federal Reserve, you can actually go back and look at all of the data behind that. And that's what I did. And what I realized and came to understand is that we have not been, every time we have not brought in enough money to pay all of the interest on the debt, let alone any of the principal, then that excess interest has gone into the principal. And now we're compounding interest. And that's what that $13 trillion deficit, or that we were servicing, rather, the debt that we were servicing, came to show. Now it's much higher than that, right? Because we know we just hit 38.4 trillion that they're admitting to. But think about it for yourself. If you have a credit card and you pay the minimum and you don't pay all the interest that month, then the interest that you don't pay goes into the principal. And now what are you doing? You're compounding interest. You're paying interest on that interest. If you do that, are you ever getting out of debt? No, you are not. So this is how they kick the can down the road. And how is this breaking down, which is the second part of the question? When you see the interest rates like on the government debt, Germany is at the highest level since they were in the middle or going on the other side of the sovereign debt crisis. It's breaking down when you see interest rates spike on what's supposed to be the safest thing that you can do, which is a lie. This is the safest thing that you can do. No counterparty risk. But when you see the interest rates spiking on the debt, that's showing that it's breaking down. And it's a big problem because if governments can't create more money, I'm not saying they can't just keep printing it, but that's your hyperinflation because that's the only tool they have left. And Manny Trinolis 4007, please forgive me if I'm butchering your name because I know I am. I'm sorry. Okay. Lynette, please help me if you can. I put an order with a reputable dealer in December 17th, and he spoke to him several times since then, asking him about my order, and he keeps telling me he will send it. Well, I don't really know how I can help you with that, but there should be no reason at all. I don't know how reputable this dealer is. I don't know who it is. I don't know anything about it. But you do have some remediation that you can do. The Better Business Bureau would be one. Why don't you talk to a strategy specialist, and let's see if we can't help you come up with a way to get to the other side of this. That's the best thing that I can tell you. So just give us a call. Talk to ops, Marie or Emerald or Maria, and we'll see if we can help you with this. But we're reputable and we do ship, and we ship very quickly, and there should be no reason from December 17th. I don't know what's going on, but we'll see if we can help you. Mr. Pitteroni 1 asks, is it possible for gold bullion to be confiscated even if you hold it in a different jurisdiction? As a Canadian, holding American Eagles instead of Maples reduce the risk or might be a good exit plan? You know, it has to be a collectible. So an American Eagle, as a Canadian, an American Eagle would not be classified as a collectible. It would be something else, but I've got to tell you, every single country at one point, including Cambodia and other places, I must have taken that somewhere else, but every single country has had gold and silver coins. We are trying to find places around the world where we can supply with the earlier coins, and Canada kind of makes me nervous, I'm not going to lie. Canada kind of makes me nervous because they don't hold, the government or the central bank, I guess, does not hold any gold. So I do think that Canada could be more vulnerable to a confiscation, particularly because they're not sitting on any gold themselves. What I can tell you is I think you can hold the barterable part of your portfolio there in fractional pieces, and fractional is less than an ounce. Okay, that's fractional. And also, the cash part of it, we can help calculate that out. And then as I'm seeing it, we will be rolling out, not me, but we will be rolling out our global strategy because it's the barterable part of the portfolio that you really need to access there. It's the rest of the portfolio that if you're executing our strategy, we would need to be able to do that quickly, because it's going to have to be timed as perfectly as we can make it timed. I'm not sure that holding new bullion from another country is any level of protection, to be honest with you. Let me come back to that. I mean, it is something that I am working on with the global strategy to figure out. So I'm going to need you to have a little patience with me, but just make sure that I am working on figuring that. We are working on figuring that out. And Timothy Marzullo, 7852, I love your Q&A, but I'm loving the educational shift too. Thank you so much. We love you, Lynette. Anything you share, we want to listen. So did you like where I did that transition? It's still kind of wonky because I'm not really used to doing that. So it might have been, but are you telling me that you kind of liked the more educational, the longer pieces in here, and then the transitions? Because I work for you. So I want to do what's going to support your best interests. That's what I want to do. So thank you very much for that. And Coffee and Cat Time, please outline Australian itinerary and when you will have a strategy partner here. And I will, we actually just finalized the Australian part of the itinerary, and we'll be putting that up on the website, because I know when we're leaving, but I'm not exactly sure of the exact date of when we do the event. And that's Carrie Stevenson, and that'll be on the Gold Coast, and I'm really excited about that. We probably will also be doing an event in New Zealand, and we're finalizing all of that right now. So I'm going to have to keep you tuned, but this is happening toward the end of March. So we have another minute, and if we do get to do the event in New Zealand, it's going to be very small. I think like maybe only 35 people, and you're going to get a lot of one-on-one time with me. I just want it small and intimate where I can give people the time that they need. So I'm really excited about that. Stay tuned. I can't verify that, but yeah, we will be in Australia in March. And I love Australia, as you know. I don't like the politics, but I don't like the politics here either. But I love the people. I love you guys so much. Just so warm, so welcoming, so fun. So I can't even say enough. You've changed my life. It's that simple. You've changed my life. But check the website. I know we're working on a new website too, which is about to be released. And we'll have all of those. We're going to keep a whole schedule of all of my dates where I'll be and doing the live things in person. And we're close to being able to move into that office. And that's when we're really going to do some live events. I'm really excited about that. And Ernest DeBella asked, as long as New Zealand is actually a town in Texas. Is it? No, this is New Zealand right by Australia, because if I'm going to be in Australia, I want to go to New Zealand. New Zealand has been, and I did get to go once a few years ago. The first time I went to Australia, my daughter and I went afterwards, but we only had 5 days in New Zealand, which wasn't even nearly enough. But New Zealand was on my bucket list since 1987, because it was the New Zealand bonds that got me into the currencies. And when you stop and think about it, I don't even remember how I stumbled across those non-dollar denominated bonds, but I was particularly drawn to New Zealand. So please forgive me, but it wasn't New Zealand, Texas. It was New Zealand, New Zealand. And this time I think we're going to be focusing more on the South Island, since I did get at least a few days on the North Island. So, but I think if we hold the event, it'll be in Auckland. I know Jessica was finalizing that. But Ernest, I probably will be coming to Texas at some point. I've done events in Houston. And did I do one in Dallas too? I might have done one in Dallas as well. It's been a little while. Text George and tell George to have me back on again. Or if you know of any event that's happening near you, let us know and we'll see. And it doesn't even have to be a financial event, by the way, because I do speak at a lot of non-financial events. So, Infinite Human at Lynette Zang. Comment. Thank you for your work. BC Friday when West Spot had its sell-off due to margin call. I knew to watch the East prices, which you teach reflect more physical. They held, so I bought. Woohoo! Thank you. You know, I keep getting this feedback that when they're watching the markets now, you understand what you're looking at. Before you had no idea. I can't even tell you how much I appreciate that, really, because my goal has always been to translate financial noise so that you can make educated choices that puts your best interest first. So thank you so much for that, Infinite Human. I really appreciate it a lot. Thank you. And Manny Petrinolis 4007 asks, wait, oh, I answered that? Oh, okay. And Adam Menzies 4759 asked, how is it when JP Morgan spoof the market, they pay a fine totaling approximately 10% of what they made from the manipulation? Please explain how that can even be a thing to keep 90% of what they made. Because it's legalized theft. And these banks and all of these new, oh God, the word just left me. But all of these fintech companies, all of these corporations that are experimenting with stable coins and other cryptocurrencies, they all have safe harbor, which means they can basically do anything they want and not get in trouble for it. Look at 2008. Not one banker in this country and most of the world, the only place that bankers went to jail was in Iceland. That was it. Iceland. I have a lot of respect for Iceland, except I think they want to join the EU now. But they were the only country that actually held the bankers' toes to the fire and took care of their population. Every other country, bankers got away scot-free. How is that possible? Because you have to look at the fine print. You don't own anything. When you make a deposit in that account, in your account, whether it's a bank account or a brokerage account or a fintech account or any of that, you have loaned that wealth to that company. It's not yours anymore. The Seed and Company, the big kahunas, JP Morgan and all those guys, they own Seed and Company. They create all of this garbage that they turn around and sell to you, or spoofing, which is pushing the price and buying and selling like in rapid succession so that they're manipulating the price. And I mean, it was even a Goldman Sachs. At one point, it was so interesting. In one of their quarters, their clients lost $10 billion and Goldman Sachs made $10 billion. Coincidence or a manipulation? So how is this possible? It's because you and I don't really read the rules. We don't create the rules. That's why we got to get sound money back in the system again. Because if it was, and you saw that, what would you do? You would pull your gold out of the system and they wouldn't be able to get away with it. We need to take our power back. It's not rocket science, but I'm glad that you asked that question, because how is it? It's because they're the ones that control everything. What do you do when the market says, no, you can't have your money back? Who do you call? Who do you complain to? And if they debank you, they don't actually legally have to give you that money back because it's not yours. You loaned it to them. And I'm not kidding, and I'm not playing with this. And that's why I'm telling you, you get a certain level of cash, call us. We'll tell you how much you need, a certain level of cash outside of the system. Because if the banks say no, you have no choice. You're done. So it's a certain level of cash, a certain level of, maybe some digital gold in Glint or Kinesis or something. And I am looking into Tether. That I will have for you next week. So bear with me because I'm kind of liking at least the surface. But I got to go deep into it. And I'm not there yet, but I will do it this weekend. I have that on my agenda. But I'm telling you, you've got to have your wealth and purchasing power outside of this system because bail-ins are very, very real. They tested it in Cyprus, and they tested it recently with 50% of the uninsured deposits in the most current regional bank failures. So I'm telling you, they know that this is going to happen. Get yourself in the right position. That first part of it, cash, a certain level. Maybe this is where some of the gold backs would live. Little bit of digital gold that you can use on like a credit card or something like that. And then the next line of defense are your barterable gold and barterable silver. Two different functions. You're going to take this to food. You're going to take this for gas. You're going to take this for property taxes and any kind of medical thing, a chronic medical issue or what have you. They have different functions. So call us. You'll talk all about your goals first. There's no good blanket answer. But if you think this system is set up in your behalf, think again. I hate these guys. I really do. I hate them. And I hate it when somebody lies to you. That's why we reveal everything. You may not like what we have to say, but we're going to be honest about it. That's our commitment to you. And Colleen Allen, 3382, says, is there a general rule to follow in knowing how much constitutional coin to save for future bartering needs? Well, yeah, there is, because what we're going to do is we're going to look at your current cost of living and how that is structured. And we have a whole template that basically says, well, if you're doing this, then you need silver, or if this is your point, then you need gold. And so we can determine how much silver do you need and how much gold do you need. And it's based upon your current cost of living because the goal is to sustain that as much as possible. When we go into this hyperinflationary event, everybody is going to feel the impact. I don't care who you are, everybody will be impacted by it. You have a choice on whether that is a negative impact, a neutral impact, or a positive impact on you. If you're sitting and holding your purchasing power intact, presuming a repetition of history, because this time is not different, and we've got over 4,800 currencies that have done the same thing as we're experiencing today, we've got lots of data to look at. So we look at that for an annual basis, and then whatever your level of comfort is, how many years you want to go out, right? So it's not random. And I guess the general rule is, how do you live your life right now? Because it's not about making your life smaller. It's about sustaining your current standard of living as much as possible. So that's how we do it. Call us. We'll do it for you. We'll help you understand it. Is that it for the questions? Oh, okay. I didn't think that was it for the questions. Okay, and Pork Roll F3 asks, you're saying silver is $1,800 to $2,000 true value. What is gold? Somewhere between right now, $38,000 and $40,000 for an ounce of gold, 1 ounce of gold. Because here's the difference. It used to be that everything was priced in terms of ounces of gold and ounces of silver. But they've now gotten you to believe that there's value in this. So it's not that this has any more value than the original $20 face. It just buys you the same thing. That is the single most important function of sound money, is to hold your purchasing power intact over time so that no matter when I go to use this, it has the same or greater, but really the same level of purchasing power as it did for the labor and the energy that generated it to begin with. So yeah, at 4,500, at 30,000, it's a bargain because all they have left is this. That's all they have left to do. And so if the more of that money that they create means that's more debt, which means that that number goes higher, just like, that's why I always show you the $10 trillion Zimbabwe note. I had somebody say, that's not a $10 trillion Zimbabwe. Yeah, it is. It's printed right here, Reserve Bank of Zimbabwe. It really is. And I can really buy nothing with it. But we get blinded by numbers. Oh, look at this. Bitcoin was $120,000 an ounce. Why? Why? What was its function that it made it worth that much of this stuff? Traders, one place. Gold and silver. Globally. Every single sector of the global market. That's what excites me the most, is let this really be a true demand and supply market. Who's setting your energy costs? Who's setting your food costs? Who's setting all of the costs for anything that we do? Traders, not true supply and demand. Traders. It's one of the ways that I know we're at the very end. The entire system has been completely financialized, but we're shifting. So, Gulf's Island Rock asks, be careful with eBay only. Use reputable sellers. Don't get faked out. I wouldn't buy gold or silver from eBay for anything. Not for anything. Because you need to create a relationship. Not all gold and silver are created equal. Not all gold and silver perform. Okay. You really can do anything that you can do in the strategy with silver. But it's much better to do some of it with gold because you need a boatload of this, whereas you need a much smaller amount of this. So this would be much easier to transport and to do everything that you need to do. But again, there's gold and then there's gold, and there's silver and then there's silver. And I believe that Zang Enterprises is the only company that, number one, has me and that has studied currencies and currency life cycles since 1987 and has put together in writing a strategy that's based on the historical norms. And we have an entrance strategy. This is what you need to perform all these different functions. And we have an exit strategy. This is when you liquidate to pay off a mortgage, to convert into income-producing assets. Nobody else has it. They can blah, 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 say anything they want, make them prove it. Why would you take anybody's word for it? And yeah, don't buy from eBay. What are you getting? Even if it's real, you're getting a piece of bullion. Or that's not necessarily so. I wouldn't buy from eBay. You do whatever you want, but I wouldn't do it. Don't be penny wise and pound foolish. But again, you can do anything you want. And I was born with SIDS. Where do we sell it when we need funds? Well, quite frankly, if you bought it from us, this is where you sell it. But what I suggest to everybody do, because when I first started Zang Enterprise, one of the key questions for all of our wholesalers is, if I bring in coins that were not purchased through us, will you buy them back? And they said yes. Here's the difference though. Okay, so just to kind of prepare you for this. If it's a coin that you bought from us, well, then our wholesalers already know the coin. And so we can do the transaction lickety-split like that. If, however, you bought the coin elsewhere, then the wholesaler's going to want to make sure that it's real and that it is what we say, what you're saying that it is. So we would have to ship them the coins, the gold and the silver, whatever, and then they would verify that they actually are really gold and silver, and if it's a collectible coin, that it's real, etc. So that process takes, don't hold me to this, but about a week. So that's the difference. You sell it back to a reputable dealer. If you bought it from a reputable dealer, call them first and get a bid price on it. Or call us and we'll give you a bid price on it, and then call them so that you can make sure that you're getting the right price for it, the best price for it. It's a way to hold their toes to the fire. But that's what I would recommend. So you would sell it back to the dealer that you bought it from if they have a reasonable buyback policy. Everything we do is standardized. So if you call us, we'll get you a bid price, and then you get on the phone and talk to whoever else you're thinking and make a comparison. There you go. And Gulf's Island Rock asks, stablecoin value in gold? Nothing. A big fat bupkis. Bupkis. Stablecoin value in gold. We'll see as this whole thing kicks off. I am really convinced, and I haven't changed my mind with anything that I've seen yet, that the stablecoins will be what ushers us into the hyperinflation. So value in gold, if you can buy gold with it, then that's what the value will be, and we'll find out. Stay tuned. Infinite Human asks, as to whether dollar will keep its name, Grayers, oh, I love Egon, Matt Pippenberg said this week at VRIC that it will keep its name and position, but it will simply reprice from its norm, which makes all the sense in the world. And Matt is very brilliant, and I like his work. And of course, I love Egon. So that's I agree with him. And Danielle Mastroco says, I'm curious what the 5 good confiscations the U.S. government has done. Google doesn't provide the results. Maybe you can make a short video on that. And I actually did. Didn't I? Did we use that already? Oh, I think it is. But I could show you that piece next week if you give me a note, because I already have that done. So I like it when it's something I already have done. That's actually pretty easy. But and I'll let you guys know this because I consider this a really key piece that I've been working on. I just got all the strategy specialist comments back on the big piece that I'm working on for the collectible market, and to show you the difference between the bullion market, the collectible market, what happened in '89, where we are today, what the truth is, so that you're not having to make any assumptions about any of this stuff. And you see, at Zang Enterprises, we all work together, right? Because people will have a different perception and perspective, and that just helps us all make better educated choices. So I can tell you, we're all working on this together. And now that I got all of that feedback, that'll be the two pieces that I'll work on this weekend, because I've been chomping at the bit to get further along with that. So I think the tether and then they'll be the two pieces that I'm going to really try and hammer out. I'm not going to have the NUMI one done for next week. I know that, because I want to make sure that it's super good. But I got the feedback. Now I can move forward. So I will do that. In-laws attic. In-laws Attic asked, what if we bought it from ITM when you were there and now want to go to you? Did you keep the serial numbers or does it have to be reevaluated? I can't keep the serial numbers, so it would have to be reevaluated. But this is what I'm going to recommend you do because, I don't know how much things have changed since I'm not there anymore. But call us, we'll get you a bid. And then call them because they did have their buyback standardized. I think they might have had some challenges, but you'll find out. But yes, indeed, because that was top of my mind, was making sure that I could take care of clients from not just ITM, but from anywhere. So we'll tell you and then call them as well because we really want you to maximize benefit. We're always going to want to do that. And in the exit strategy that we have, we've got a variety, and you will know all of this. If you're our clients, you will know all of this structure. It's a series that I'm putting together in a piece that we're working on so that you'll have a better idea of what you can expect throughout. So they will have to be they will be. It's a different wholesaler. They're gonna want to do that. But still, you can call us and get the bid and then call them and see what they will pay you for it. And wherever you get the most, that's where you go. And Infinite Human asks, I have a CFP with Austrian bent who aligns with LZ, but he wants me to be diversified within metals, which is fine. What would that look like? Pre-33 plus bullion of each and junk silver. What more? Well, that's a variety of all of the above. So, yeah, I mean, if you're really bent on bullion, there are some people that they live on hopium and they think that, no, they would never do that again because it's not part of the monetary system. Buy, flip, and design. And so that just won't happen. So I like what this guy is, or this person is saying. I wouldn't even mind having a conversation with him, Infinite Human, because diversified within metals, yeah, do bullion, but make sure that you have enough of this so that if this bullion gets confiscated, you're made whole. That's all. It's always setting yourselves up. What if I'm right and what if I'm wrong? So he could even be talking about some slab silver, which I'm working on in the Numi thing. So we'll take a look at that as well. But I like that. What more? Junk silver, rounds, new silver, constitutional silver, pre-33 gold, probably pre-48 foreign gold, and maybe even some bullion in there. I don't know, but I'd like to have a conversation with him if he would have one with me. And Gulf's Island Rock, Lynette loves her pre-33. I do. I love my pre-33s. There I am, 10 years old, and you couldn't own more than 5 ounces of gold except the way my uncle was holding it. And he had to have had at least 3,000 ounces. So you're going to have hopium, but I like the fact that he had the kind of gold that you could use in the marketplace because I'm executing a strategy. And you're right, I do love my pre-33s. And Coral, did you want to say something? Oh, I thought you took a breath. Okay. Coral James 2215 asks, Lynette, can I please come in and live on your farm with you? Well, Coral James, maybe. I don't know. Maybe we'll run a contest. We do have, I'm so happy to say that we do have a wonderful couple that is right now down on this farm here in Central Phoenix. And you can come and see this farm here training, and then they're going up through the new couple for the Bugout. So we're going to be doing a lot of development up there. I'm so grateful to have good people up there because that means then we can bring the animals. Right now there's wild animals up there, but I don't have any chickens or goats or anything else up there. And what we've planted, we've got to get a lot of food in the ground. We've got some work to do, but it looks like we're moving forward on that again. I'm grateful to have it and relieved that I have some wonderful people that are going up there. And Joe Citizen 7911, Lynette, you are my hero. Oh, thank you, Joe, but I'm just me. Please spend 2 minutes talking about Canada selling their gold reserves and the consequences of doing so. Well, you know, Great Britain did it. The UK did it. Back in the early 70s, they sold all of their gold holdings or most of their gold holdings. Well, you think about it, because right now on a global basis, like I showed you a little while, I think I showed you a little while ago, but globally, central banks are laying in more gold than they ever have since they started tracking it, at the same time that Canada has none. So therefore, they have no support to their currency. And I mean, I hate to say this, but whoever holds the gold is going to hold the power. And I think that's part of the shift in power and financial power from the West, from the US and other advanced economies to the East. Because frankly, us advanced economies have really lost sight of what's important as we've just turned everything into a big casino. You know, I remember back in the day, and some of you may remember this, where you would go to Vegas and you'd be gambling with this, with an actual silver dollar. You remember those days? That doesn't happen anymore. But when you're looking at a country like Canada or the UK, desperate governments do desperate things. What I'm waiting for, which is why I'm transitioning over to the UK here for a minute, is because all of that physical metal that they shipped over to us like a little bit more than a year ago, or about a year ago, right? Well, they don't own any gold. So what gold did they ship over? Other countries' gold that they're holding their gold for? What happens when those countries ask to repatriate their gold? This is going to be a chain reaction. And, you know, and we saw what Canada did during the trucker strike, didn't we? And, you know, I mean, we Americans think of Canada kind of like us, but they really said, you're not doing what we want. We're cutting you out of the system. What happens, or what do you think would happen if we were more integrated into a digital system? It'd be even easier to do that. And if anybody even loaned them $5 so they could buy lunch, they were also cut out of the system. So the consequences of Canada selling their gold when the currency is hyperinflating is that they have nothing to support the currency with. Having said that, you need to understand that the world needs a big hyperinflationary event and a huge financial crisis so that they can shift into the new system and get you to cooperate with it. So if you're not sitting on any gold or any silver or any cash outside of the system when everything starts to implode, they say jump, you're going to have to say how high. I'm going to tell you, there is nothing more important than community. And even though that's been in my mantra since the beginning, because sometimes I just know things. So it just kind of, I put it in there. But I'm still learning how to build community and how to make that rich. And the more that I'm looking at everything, the more I realize that that is the single most important job that I have, is to bring people together, because too much we have been torn apart. I did a video, or the video just came out, Mimi Nicklin, who I saw at the Nomad Capitalist event, and Her message is about empathy. And I have to tell you, it didn't get a lot of views. If any of you have not watched it, I want you to go in and watch it. Because what we're really talking about here is people coming together in community versus what the government and the central banks have engineered is a divide and conquer. We have to have the bandwidth and the ability to have the hard conversations and have everybody's voice heard. It is a cult where there's only one way to think. And right now, if you don't think the way I think, and this is not, I'm not talking about it in here, but in general, you look at what's happening. If you don't think the way I think, then I hate your guts. That's not what we have to do. Even if they think something way different than what we think, we have to have the ability to respect each other's opinion and have that conversation. Because one thing I've learned in my lifetime, even if it is my very worst enemy and I know that what they're trying to do is hurt me, I do believe that somewhere in that conversation is some grain of truth that I can learn from. And I think that that's what we need to do these days, is we need to develop that community. Yeah, you need a foundation of sound money, but what we really, really need is everybody coming together and saying, enough of this garbage, enough. It doesn't work. It's not in our best interest. That's not what we want anymore. We won't use it. But we will use redeemable gold money because the public has to take their power back. Can we do it? Well, for sure, if we don't try, then the answer is no, we're not going to do it because they will never volunteer giving up their power or their money monopoly. And it's the corporations that have a money monopoly. And central banks are private corporations. Aren't you tired of working for corporate debt? So I know this started out with Canada and the consequences of them not holding any money. They're going to be low man on the totem pole. If it turns out that the U.S., I think we may be globally audited. I mean, the world has just taken our word for it. We heard all about how that was Fort Knox was going to be audited and blah, blah, blah until they opened the doors and then it got silent. So what does that mean? So I don't know that the U.S. has it because of all of the funny contracts and that counterparty risk from that chart that I showed you where they were selling and leasing and doing all sorts of funny business to suppress the price of gold. Yeah, the consequences for everybody, not just governments and not just central banks, but for individuals, the consequence of not having their own gold and silver reserves is that you get to be dictated to. They get to tell you what to do, when to do it, how to do it. And if they don't like what you're doing, they'll cut you off. Is that really the life that you want? Is that what you want for your children? Look in the mirror. If not me, who? If not now, when? I'm trying to give people that don't even know they need a voice. And mega praise him. I still don't understand what bullion is. Isn't gold gold? Why is it called bullion and why? Great question, mega praise him. Thank you for asking that. Bullion, the government classifies as monetary gold. The pre-33 is collectible gold. So it's in two different categories, even though they're both gold, right? This in the past has been exempt from confiscation. You cannot hold these in a retirement plan. I don't know why. Everything is standardized. You can hold Bitcoin in a retirement plan. You can hold, they want you to hold private equity in a retirement plan, but they don't want you to hold this in a retirement plan. Why? Did you ever stop to ask yourself why? You can hold all the bullion you want in there, even in physical form. Well, this is monetary. This is collectible. This the masses will own. The bullion, the masses will own because they go, oh, I don't want to pay those premiums. Well, you know, my mother always raised us that she would always rather have one good piece than 10 of the worst. So this is your good piece. But that's why it's monetary gold, and monetary gold is what gets confiscated. This is collectible gold. There are 1 ounces that go for many, 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 many millions of dollars. I think one of our strategy specialists said that the latest thing was something like 30 million. Don't hold me to this, but something like 30 million for 1 ounce of gold. Who in the world could or would afford 30 million for an ounce of gold? Probably somebody that writes the laws or has the ability to write the laws. But because the governments don't want you to understand what they're doing, when they do an overt confiscation, because inflation is covert. I mean, there's all kinds of covert ways for inflation. But when the government does an overt confiscation, they don't want you to understand that it's because they're getting ready for a revaluation. So the way that they would do it is, let's say spot, God, I remember when I'd say, let's say spot's at $2,000. Okay, well, let's say spot's at $10,000 when they decide to do an overt confiscation. Most of the gold, at least in the US, most of the gold that people own are in IRAs anyway. So they'd say something like, well, it's your patriotic duty to turn in your gold, but we're going to pay you $12,000 an ounce for it. Most people still believing Wall Street, I don't know why, because I don't believe them, but most people still believing them would go, well, look at how awesome they are. Gold is only worth $10,000 an ounce, and they're willing to pay me $12,000. Okay, you can take my gold. And so they do this big sweep of IRAs. But that person that paid $30 million or even $1 million for 1 ounce of gold, they're not turning it in for $12,000, are they? So I look at the pre-33 the same way that I look at the health insurance of the federal government. It's way better than anything that I can possibly buy myself, but I don't have access to their medical plan. I do have access to this, not a $30 million coins. You just stay below fundamental value. And fundamental, did I do that video on fundamental value? I don't think I did it on everything. I did it. I did do a video. Yes. That's right. Maybe we can put that link in. The difference between fundamental value and market intrinsic value. Go and look at that, because they want you to think that that's the truth, but it's not. But bullion is new stuff, and it can be from anywhere in the world. If you can, a really simple way to know whether or not you want to buy that kind of gold, just if you can hold it in an IRA, don't buy it, because then it's classified as monetary gold, and they can do a big sweep and take it away. But if you are married, or even if you're doing it inside of an IRA, and so your only choice is this, then what you want to do is outside, properly diversify it. So if you're going to do this, if you're going to do bullion, make sure that you have enough of the collectibles so that if they do a confiscation and take that away, you're made whole. And the whole strategy is a full circle, right? So that you are going to be much better off on the other side of this. But any costs, any fees, anything, we're going to make you whole. The barterable part of the portfolio you're using up, we need to recoup that principal. So, and ATX 1235 asks, I'm a silversmith jeweler. That's awesome, because it's one of the ways, what wasn't confiscated? Pre-33 coins and jewelry. So love that you're a silversmith jeweler. I was just talking to Ashley. She's our social media manager, and she was telling me that she just found out a friend of hers moved to Paris and started buying sterling silver, like flatware and stuff, and turning it into jewelry. Right? You know, I love this stuff. I do. And I'm glad to hear it. Katzasari, 1717, how do they do overnight valuation? What does that mean? What about government bonds? Well, government bonds is government debt, and they have to repay that debt. And the choice that they make, especially advanced economies, is to repay that debt with dollars that have zero value. So an overnight revaluation happens when all confidence is lost and the zeros start going on, like my $10 trillion Zimbabwe note. I mean, this can't even buy 3 eggs. It can't buy you anything. So when that happens, nobody trusts the system. They don't trust the money. They don't trust the government. They don't trust the central banks. All confidence is lost. So those 3 eggs might cost you 1,000, whatever, and they start to lop off zeros. So they do it on a weekend after Friday's close, or they do it overnight, and then they always do it on a weekend because typically the banks are closed, so you're kind of like there's nothing you can do on the weekend. And then when you wake up, if you went to bed at night, let's say, I don't know what that coverage is going to be. On average, it's 1,000 to 1, but it could be less than that. It could be more than that. You're such a good girl. And so you go to bed at night and you have $1,000 in the bank. When you wake up in the morning, you have 1. Now, that repays the debt with dollars that have no value in this country, but this is true anywhere in the world. And also stocks implode, bonds implode, government debt implodes. Then we have this window with gold and silver on average. And again, it could be shorter than this. It could be longer than this. I don't know. But they revalue against something that is all intrinsic value. This stuff has no intrinsic value. It's used in one place. So they revalue this that has really no value at all against gold that's all intrinsic value, used in 33 different places in the global economy. They revalue this against that. When we were talking about fundamental value and the fundamental value of an ounce of gold right now being somewhere $38,000, $40,000, the more of this stuff that they create out of thin air at no cost, the higher that number goes. But just like this $10 trillion Zimbabwe note, when it goes there, you're going to understand it because a pack of gum could cost $500 trillion, right? And as outrageous as that might seem, I actually got to experience that almost firsthand in a way when I took my daughters to Europe and we went to Hungary, Austria, and the Czech Republic. And I was really busy, so I wasn't really paying attention and thinking too much about it because I could have just gotten euros and used them every place that we went. But since I wasn't really paying attention too much, I ordered in forints, euros, and then whatever the Czech Republic currency was. And I did, it seemed like things were cheaper in Hungary, so I did $2,500 in Hungarian forints, and then 3,000 in the euros, and then the Czech currency as well. When I got the currencies in, the euro stack for 3,000 was about like that, and I think it was a teeny bit bigger for the Czech currency, but you could have choked a horse with the forints, with the Hungarian currency. So my first reaction when I saw that was, wow, they must be really experiencing a lot of inflation. And it was really interesting because when we went there, we did, because my daughter wanted a pack of gum, it was 1,200 florins to buy a pack of gum. And that was kind of normal because they were kind of used to it. And the Hungarian people, because I would ask, wow, how's inflation impacting you? And they go like, oh, well, not so bad, blah, blah, blah. They didn't really understand what was happening. But the interesting part about that was that they would have the cost of, say, when we went out for dinner, they would give me the cost of the meal in terms of euros and the cost of the meal in terms of forints. And because I had bought both of them at the same time, what I found when I made that comparison, because I had a little pad where I kept how much they actually cost me per, it was 20% cheaper if I used the local currency. I thought that was pretty interesting. But that's how they do the overnight revaluations, is they lop off zeros. On average, it's 1,000 to 1. On average, you'll see spot gold and silver. We have about a 9-month window to execute one part of the strategy, which is paying off that fixed rate debt. Could be less, it could be more, and everything is about timing. And that's why we spend so much time with our clients, because we want everybody to know what's going on, because we're actually executing a strategy. We aren't just throwing you in gold and silver and going, good luck to you. No, we're going to help you execute this whole strategy. And Jim Kimberlin asked, adding sound money to be really diversified, what is your suggested percentage? Whatever, look, other than cash, I'm all in. But I've been in these markets on some level my entire life. Think about the fact that you're suddenly seeing Wall Street saying that 20% of your portfolio should be in gold and silver. But I want to ask you a question. When it's a positive trend, when you see higher and higher lows, because I can't give you a lot of guarantees, but I can give you this one. If you continually get higher and higher lows, you will get higher highs. That's how you know it's a positive trend. That's the trend that we're seeing in both spot gold and spot silver. How do you know it's a negative trend? When you see lower and lower highs, because if you keep getting lower and lower highs, you will get lower and lower lows. It's not rocket science, it's just logic. But what they do in the melt-up phase, which is where I believe we are, and that's what the spot gold and silver charts are telling us, is that what we're really looking at here is a distraction. Look at how many zeros. Look at how the market's going up. Look at this, look at that. When the real trend is in the purchasing power. Because it does not matter how many zeros are at the end of these numbers. It matters what you can convert it into, what you can buy with it. So 10 trillion times 0 is 0. So what do I suggest? Whatever you're comfortable with, that's what I suggest. My personal level of comfort as an ex-banker, as an ex-stockbroker, is I don't own any of that crap other than cash, because I'm running a business and that's our current tool of barter. The rest of it, why would you want the lion's share of your wealth in a negative trend? It just is illogical to me. I always want to hold the lion's share of my wealth in an undervalued asset that's in a long-term positive trend versus an overvalued asset or instrument that's in a long-term negative trend. Every time they tell you they need to lower interest rates, they're telling you the dollar's overvalued and they're taking it down. That's what that means. So whatever you're comfortable with. And sometimes we don't have a choice. And then you want to be properly diversified. And Jennifer Weber, 4832, you should not be petting Juliet when you are allergic to her. Juliet, come here.
I took my antihistamine today.
Oh. Well, okay. Jennifer Weber, 4834. This doesn't tell me I'm not having much expendable cash, what my options are. I don't have much physical silver or copper. Raising 7 kids took most of my money, which wasn't much. I did all I could. So this is really what you need to be doing. You need to be developing that community. Because in community, everybody brings what they have. You know, they kind of make fun of me, but when after 2008, when I bought this property, I was not a gardener. I was not a farmer. That was not my thing. But I 100% knew that the biggest issue for most people in these transitions is food. And if I could feed the world, I would. I do not like it when people are hungry. So that's when I became an urban farmer, and I was doing everything myself. Weeding and getting rid of the front lawn and laying irrigation and mucking out chicken yards and doing all of that. I'd get up super early. I'd go out there with a headlamp at like 3, 4 o'clock in the morning until I had to go to work, and then I'd go back out when I would get there. When I would get home from work. So I can lay irrigation. Do I want to lay irrigation? No, I do not. Do I want to wake up at 3 o'clock in the morning and put a headlamp on and go out and work in the garden? No, I do not. But I'm happy to share what I have with you if you'll do that. So what I'm going to tell you and everybody else out there, you must develop valuable skills because those are barterable. Plus anything that's physical is barterable, but develop that community. Go to a farmer's market, get to know who's growing your food, give them a day or 2 or so of your labor. You'll learn a skill, you'll create a relationship, and if push comes to shove and there's 2 people that want food and he knows you and they don't know the other people, guess who's getting the food? So I'm telling you, you want a foundation of sound money, and gold and silver in any form is money, is monetary at its base. So there's all sorts of ways to accumulate at any budget. But quite honestly, learn those skill sets that come invaluable. The people that we have going up to the Bugout are plumbers, carpenters, farmers, teachers, doctors, right? It takes a village. Become part of that village. Surround yourself with those people that bring all the different things together. So that is really community, developing that community. That's the best advice that I can give anybody, anywhere, in the whole world. Local to create surety in food, water, energy, security, barterability, wealth preservation, and shelter. Globally, to get sound money back in the global system again. We have to do this. And oh, by the way, I just did a little video. We're okay. I just did a little social video on this because when I was walking through our new offices yesterday, there was some copper wire that, from running electricity, and it brought me right back. So you'll see this if you look on, I don't know whether she's putting on Instagram or where, but when I was young, my father was a developer, and I would go down to his job sites and I would accumulate the scrap copper. And it also reminds me of how many questions I get about copper. But anyway, I would gather the scrap copper. And at night when I was watching TV, I would whittle off the plastic. And then I would take that copper and I would go to my Uncle Ali's and sell it to him. He was a junk dealer. So I would sell it to him by weight. And then I would go to my Uncle Al's and I would buy stuff. And, there's all different ways that you can accumulate. If you know where they might be doing some building, because that's what it reminded me of. Pre-1982 pennies are 95% copper. But if there's a construction site, go collect the scrap copper. sit there at night, whittle that off. You'll accumulate a whole bunch of copper. So don't limit yourself to only being, well, if I don't have $10,000 or if I don't have this or that, then I can't. There's all different ways that you can accumulate. But community is my biggest recommendation for all of us, no matter what you have. And Detroit Warrior asks, do you see foreign currencies revaluing with a gold-backed currency? And I think you meant backed currency. And the answer is ultimately yes. But they cannot just put gold into the system because it would fix the debt where it is. And they have to burn that debt off in order to be able to produce more fiat money. So, I do see that happening. And that's why we all have to become our own central bankers, right? And develop that community. Yeah, I do. Because whoever holds the gold is going to hold the power in this power transition. And I hope it's obvious to everybody that the power is shifting dramatically right now. I've never seen anything like this in my lifetime. Not even in the 60s and 70s was it quite like this. I will say I saw shades of Kent State with what's happening in Minnesota. And my sister was billy clubbed in Kent State. And for those of you that aren't aware of it, it was the National Guard with student protesters against the Vietnam War that shot into a crowd of students and killed some. But fortunately, my sister was billy clubbed, but she was okay. I don't know if it knocked enough sense into her. No, I'm only kidding. I shouldn't say that. That's awful. But, and J. Jones 7776 says, Lynette, if the Fed is insolvent, they are, so every central bank is insolvent, does that mean the entire system is insolvent? Yep, the entire system is insolvent. What is your stand on the Fed's balance sheet and JP Morgan Chase? Will they be able to step in and save the system? No, because JP Morgan Chase is also insolvent. Why? Why are they all insolvent? Because we had 15 years of zero interest rate policy. So any of the debt that was created during that period of time, 15 years worth, is all underwater. Why are they underwater? Well, here is my sterling silver chopstick. This is interest rates. This is market value of the debt. So it could be a mortgage, it could be student loans, it could be car loans, it could be any debt, credit card loans. All right. When interest rates, so we had 40 years of this. When interest rates go down, the market value of that debt goes up. This is when it's issued. Short-term debt does not move as much as 30 and 40-year debt, which is what we're seeing in the debt markets right now, right? So when interest rates go down, market values go up. So if you've got defaults in there and say you're sitting in a mutual fund, you're never going to see it because the other bonds that didn't default will cover that up in a dropping interest rate environment. But that's not where we are right now, is it? 2022, they started raising interest rates. And look at what happens to the principal value of those bonds. They are underwater. And did we put out yet the FDI, Did we put out the FDIC video that we just recorded? It's kind of hard to say. We're producing a lot of content.
You put it out like a few months ago.
No, I just did another one recently. It's coming up, and you'll see this. But if you go into the DIF report, so that's the Deposit Insurance Fund, that's the money that the FDIC has in place for bank failures, right? If your bank fails, then they can make you whole as long as it's insured. Okay, so if you go into that DIF report, what you're going to also see is the level of the bonds that are underwater in the FDIC insured banks. They're all insolvent. We have zombie governments, therefore we have zombie central banks, we have zombie corporations. Look at the people that they're counting on, the consumers, to continue to consume. We have zombie consumers. Well, that's not good, is it? Because there is no room for a big failure. So why is everybody insolvent, including JP Morgan Chase? It's because the level of debt that they're holding on their balance sheet is severely undervalued. If there is a bank run, they have to prevent this. They have to keep your confidence, because if there is a bank run, that becomes obvious. They don't want you to know that they are insolvent, because then you might make different choices. Oh, I don't know, like buying physical gold and physical silver. What a concept. Buying sound money. No, they need you to stay in the system. So no, they can't save the system. What they're trying to do is just maintain things so that people don't panic and run out. They're preventing a run on the banking sector so you don't know that they're insolvent. They were, and I wish I had print screen back then, because I've not been able to find it since, but I saw it with my own eyes, so I know this existed, where the FDIC said in 2009 that if even one more small regional bank went out, it would be obvious to everybody that they were insolvent. We were one bank failure away from everybody realizing that the emperor has no clothes. It hasn't gotten better than that. It's gotten a lot worse because of 15 years of ZERP. It's crazy. And Coral James asks, 2215, what % of your stack is in silver or gold? You know, I can't really tell you that. I'd have to do an analysis on it, because the level of silver that I bought is based upon my current cost of, well, when I laid it out, the current cost of living and what I needed silver for. So I have, you know, and I did it not just for myself, but also for my 2 daughters. So I have 10 years worth of barterable silver and barterable gold. It's a combination. It's not all silver. And I don't do it by percentages. Oh, I want 10% silver and 90% gold. I don't do it based on that, because I'm executing a strategy. So it's based on what I'm trying to accomplish. And so the first part is sustaining our standard of living, being able to put a tank of gas in the car if I need it. That's what the silver's for. Really important, being able to pay your property taxes, to be able to pay off my mortgage, you know, etc. I couldn't tell you what the percentage is. I really don't know, because that's not the way I think about it. I have enough silver for my daughters and I to sustain the silver part of our standard of living for 10 years. And then I have enough barterable gold to do the same thing, property taxes, that kind of thing. I don't know. If I had to guess that, what do I have more than anything else? It's this. And I have it in every category, from just basic all the way up to legacy. Legacy is where you have a very, very small number that are known to exist in the whole world. And that's the kind of gold that, well, I hope translates to different generations, right? I mean, I want to think that I'm building a legacy that many generations will be supported in, because I want my children to have the ability to dream, and actually the ability to make those dreams come true. That's what I had being born in 1954. I could dream and I could make those dreams come true. But, oops, Juliet, Juliet, come here. Come here. No, come around here. I'm sorry. She had to be here with me today. I know, honey. It's okay. It's okay. Such a good girl. So yeah, I don't go by percentages. I go by what I'm trying to accomplish. And without a doubt, it's to build a major legacy and to convert into income producing assets. So I have a little bit, a decent amount of legacy gold that I hope never, ever, ever gets used. That's my hope. But I also have a lower quality, lesser quality of this gold to convert into air rights, to convert into water rights, to convert into income producing assets that I can't outlive and my children can't outlive. And those opportunities are going to come about. So I'm sorry, I can't answer that question better than that because I honestly do not know. And Jag 1733, what is the problem with having gold or silver bullion? The only problem with having gold and silver bullion, and I don't feel the same way about silver, quite honestly. I have lots of silver bullion. I have lots of silver in lots of form. I have lots of gold in lots of forms, but I don't have gold bullion. And the problem that I see with it is the probability or possibility of an over confiscation, because it's happened before. And thinking that this time is different, it never really works like that. And we're seeing confiscations, particularly in Africa. We're seeing a lot of confiscations, and there's all different ways that they can do these confiscations. So for me, having that experience with my Uncle Al, this is where my level of comfort is. For those that have a different level of comfort with bullion gold, monetary gold, I'm not saying don't do it. You have to do what you are comfortable with, regardless of what anybody says. All I'm saying is to properly diversify. So what if you're right and what if you're wrong? If you buy bullion and there is no overt gold confiscation, then you're fine. If there is, now you got a problem. I'm not saying that they're coming banging on your doors, because that's not going to happen. There's not enough Americans that even own gold in order to do that. They'll attack the IRAs first. But what I am saying is a properly diversified portfolio protects you no matter what happens. Booty, hooty, Rudy, Manooty. And because we can be so clear on what its true value is, is it really expensive or is it really cheap, right? Do I want to buy it? Do I want to hold it? Do I want to liquidate it? Well, if it's really cheap, don't you want to keep accumulating it? So that's the problem. I have no problem with silver bullion. I do have it, but I haven't really gotten to it yet on the probability of a silver confiscation. I know that it's a strategic metal, but it gets used up. But I don't know. I don't want to say until I've really kind of dug into it as deeply as I like to dig into these things. So we'll just put a pin in that one for another minute. But that's the problem that I have with gold bullion. That's all. You've got to do what you're comfortable with. I'm showing you what I'm comfortable with. And I think that's it. Can we do one more? All right, we'll do one more. And that's Lau 6849. Hi, Lynette. At what point after the reset revaluation of gold does metals come down in price? Will it crash eventually? And I have done some videos on this in the past, but I'll do it again as well. But I don't know how long this will last. On average, we will have in that first revaluation, we might have about a 9-month window to execute that first part of the strategy. And then, yes, indeed, in terms of the currency, gold and silver will drop and reset. But what happens when they do that, because they haven't changed behavior yet, is you will see on the charts that the gold and the spot markets start to rise immediately again. So they get to another point because they didn't really get the confidence. People start to see, oh, nothing's really changed. This inflation is crazy. We lose trust again. It goes up. And globally on average, there are 3 overnight resets inside of a reset scenario. But in Zimbabwe and Venezuela, they're on their 6th iteration. So I can't guarantee that there's going to be 3 or 1 or 6 or I don't know. So even in this first revaluation, all that is it's you paying off your fixed rate debt so that they can't, screw you. Because that's what it's about. Whenever they change the rules, it's never in your best interest. So you don't want to be in that circumstance. So there's a certain level of gold that you hold over here when we have that overnight reset, because we've got this exit strategy in place. Our goal on the way out is to capture the most for you that we can. And we have a number of different avenues that will do that. So, what we'll do is our absolute best. We know how these things move, and we're putting everything in place so that it's as smooth as possible. But part of that is also our client cooperation. So we've got some things on that as well. And I'll come out with more. Just be patient. But yes, it'll crash eventually. Then it'll start going up again. And then they'll have another overnight reset. And eventually all of this debt and this garbage will be burned out, and they'll put a component of gold in the new system, but it has to be redeemable because it won't be over until it is. And is that it? Or
We've got about 9 minutes. We can wrap now. We can keep going.
let me do one more, but we still have that other thing we have to do, and then I have my appointment. Okay. So let's see. This is an interesting name, so I will just spell it, okay? And it's FCKUP1GJ6. What's crazy is a 1982 penny has more intrinsic value than a $1 bill. 100%. Why? Because copper's used in a whole bunch of places, and the penny or the dollar bill or the $100 bill, take your pick, is used in one place. This stuff, one place. One flippin' place. And what I think is extremely interesting, and we'll watch it unfold together, because what we're really witnessing is the development of a new monetary system, which is why I find this really interesting. But what I think is interesting is look at what's happening in the crypto space. And yet you also at the same time have all of these governments and these corporations that are rushing into this space and developing the infrastructure for it. This is so interesting. We could not be living in a more interesting period of time. And with that, we have other stuff, unfortunately. I could stay here all day, really, I could. And this is my favorite day of the week and my favorite time of the day and the week, because I get to spend it with you, and I just can't even tell you how much I appreciate your being here. So with that said, together, we can change the world. Let's just do it. What the hey? What the hey? Imagine if we actually get redeemable gold back in the system, our great-great-great-great-grandchildren will thank us for it. And until next we meet, please be safe out there. Bye-bye.